What a day in the stock market. We saw all the indices in the United States up over 1%. A couple of them were up 1.75%. This was largely off of the news that the United States and China will be getting together for a face-to-face meeting in early October to discuss the ongoing trade war. Now, we've seen this type of behavior in the past where stocks get overly excited when they hear news like this, only to see those stocks fall very quickly after that as some of the negative banter comes back and forth. But today's activity was a little bit more impressive. Importantly, we did close above our moving averages in most cases. So I think this one has a little bit more of a chance for some legs going forward. So we're going to look at all of that. We're then going to take a look at a trade application in a drug stock that has been kind of falling by the wayside here for the last year or so, where maybe now is an opportunity to take advantage of that value. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's September 5th, 2019. First of all, if you're new, welcome aboard. Thanks for being with us here tonight. Remember to sign up for our YouTube channel. Also, go to our description area over there, sign up for our email distribution list. We're also heavy users of Twitter. Feel free to follow me at Brandon Van Zee. Also, we have a presence on Facebook. Feel free to join our group at the web address embedded in the logo in front of you. All right, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us. And this is just going to show us the 4-grid version of the market forecast technical indicator that you can find over on the Thinkorswim platform. But this allows us to see all 4 of the major U.S. equity markets side by side by side. Now, one thing that should stand out to you is that we continue to have bullish postures across the board. Even with the Russell 2000. Now, the Russell 2000 technically got a bullish posture yesterday, but it helped that the Russell 2000 was up another 1.75% today, as opposed to failing right out of the gate. You'll notice that the Russell 2000 has kind of been going back and forth over time. Like, for instance, right here, you also had the Russell 2000 give you a bullish posture. That's what that green background color is telling us there. But the very next day, you had a sell-off, and then the day after that, we had a really aggressive sell-off. And of course, we went right back to that bearish posture. Fast forward to where we're at right now, the Russell 2000 gave us a bullish posture yesterday, but instead of kind of following that with a whimper, we followed it with a bang to the upside. That's a big move for the Russell 2000, not only up there 1.75%, but also closing above that moving average. Note that that moving average just turned yellow right there, letting us know that price is now above that falling moving average. Ideally, we'd like to see that moving average curling higher, but we also know that the moving average uses past data to calculate its line. And so it'll take some time before that line starts moving higher, but this is a good first sign there out of the Russell 2000. You know, the behavior is somewhat similar out of the others, except for I would say it's even better. In the case of the NASDAQ composite, notice that we were up 1.75% there today as well. And unlike the Russell, we cleared all of this prior resistance area. You know, we had been stuck in this sideways channel for quite some time, about a month there. And, you know, as some of you have heard me say in these presentations, I'm not really going to trust this market until we can firmly close above the moving average. And that's what we were able to do here today with the NASDAQ. So not only do we continue to have that bullish posture according to the market forecast, but we can now say that we have broken resistance to the upside. We are now trading at levels last seen going all the way back to this candle right here on August 1st. So we were able to basically eliminate all of that chop and slop from the month of August. And we're kind of back to where we were as though the month of August never happened. And the same thing can be said up here for the S&P 500 and the Dow Jones as well. Note that they weren't up as much today. They were up 1.3% on the S&P 500 and the 1.41% on the Dow Jones. But where they are more impressive than the other two is that we now have what's known as a strongly bullish posture. Notice the slight difference in the coloration of the background of the chart there. It's a darker shade of green on both the S&P 500 and the Dow Jones, whereas we don't see that down below on those other two indices. That occurs when the green intermediate line on the market forecast gets up and through 50. It's a more promising sign when that occurs. And so as it stands right now, notice that the intermediate line on the S&P 500 is at 54, and the intermediate line on the Dow Jones is at 52. So you still share those common elements of the NASDAQ chart, where the big aggressive move up today puts us back to those levels in early August, and we cleared the prior resistance of the entire month of August. But we can also say that we have strongly bullish postures here as well. I think I saw here on the Business News channel earlier today that we're only 1.5% away from all-time highs on the S&P 500. So a lot of people have kind of felt like they've been licking their wounds a bit here in the month of August. They might be surprised to learn that we could break out to new all-time highs any day now if we continue this positive momentum going into the marketplace. Now, you will notice that, unfortunately, the market sentiment lines still have some work to do. Look at that orange label. All of them do say falling at this point. Remember, that's a longer-term look-back period on the market forecast technical indicator. And so, there's going to be a requirement likely that we need to get through those old highs before we start seeing those lines kind of turn a bit higher. So it's not perfect. Rarely are markets perfect. And if they ever look to be perfect, you should probably be suspicious about that. But I would say that things are more promising now than they had been in the past. And the fact that we were able to break through those resistance areas kind of lends more credibility to this particular move off of some of the China and U.S. Headlines that we saw, compared to when we saw that earlier in the month of August, where we were still trapped in that sideways channel. At least now we've broken out of that channel in most of these indices, and we're going to start working on turning that moving average around now as kind of our next step. Let's go ahead and take a look at our next chart setup. Let's go ahead and review the 1040 crossover method here. As you can see, the only issue that we have here currently is on the Russell 2000, where we do have a bearish crossover there. That occurred several weeks ago, so that's not anything new to report, but it is the only one, it remains the only one that has a bearish crossover. So despite what felt like a turbulent month of August for most of the stock market, we didn't even see the longer term moving average way to look at the market, the crossover view, be affected too negatively, at least if you're looking at the S&P 500, the Dow Jones, or the NASDAQ composite. So kind of all systems go there for the most part on that particular view. As we look at our next chart, let's look at the three green arrows. And as you can see here, we do have three green arrows on all four of our charts. You'll notice that we got the green arrow here today on the Russell 2000 as it closed above that moving average, but it's basically right on it. So, be careful with that one, because as soon as tomorrow, even if we were down just 0.2% or something, a very small amount, we could very well get a red arrow back on that moving average. The other ones look a lot more healthy. These other ones over here, we have a lot of separation between current price and the moving averages themselves. And so that's a promising sign. The other thing that is somewhat promising here is that we do have green bars on the MACD histogram. So let me show you the S&P 500 as an example. I'll right click and go to maximize sell. Notice that this histogram down below has the ability to give you either green bars or gray bars after you receive your green arrow on the MACD histogram. The green bars are preferred because it's basically telling you that the velocity of that momentum is increasing at an ever greater rate as each consecutive candle is formed. So we actually have an improvement in momentum. We don't just have positive momentum, we have an acceleration of that momentum to the upside. At least that's what we've seen here over the last, let's call it 2 weeks or so. So that's a promising sign there as well. Now, obviously, from a price perspective, we're going to have some work to do to get through this consolidation area that we had here at the end of July, where we were hitting all-time highs. But at this rate, that momentum will help the cause. It's gonna basically say that the wind is in the sails of the bullish investors right now, and so they'll have a greater chance at success if they have a lot of momentum behind us to break through that prior resistance area. Now, whether that happens or not is anybody's guess. Many of you are aware this is a very news-driven market, and we could come out and see some tweet throw everything out, that we just talked about here. But as of right now, from a technical perspective, it looks pretty solid. One thing I should note is that we did have some upper shadows. The NASDAQ was not bad. So if we were to look at the NASDAQ, that was not a terrible upper shadow right there. But if you look at some of the others, that's a pretty big upper shadow that you see right there on the Russell 2000. It's a pretty big shadow you see there on the S&P 500 and also on the Dow Jones. Now, they're not violent, meaning you don't have a situation where the bodies are smaller than the length of the wicks or the candles, shadows, I should say. Depends on how you describe that. Some people call them wicks, some people call them shadows. But the point I'm trying to make for those of you that are unfamiliar with that language, it's that kind of the stick that you see above the box, and that's telling you basically where did we open, where did we close, what was the range of the day. Typically, you don't want to see the long upper shadows if you are bullish. You like to see the long lower shadows like we saw back here on the low point here on the Dow Jones when we hit nearly 25,000. Notice that long lower shadow right there. Notice over here that long lower shadow. That gives you the impression that buyers are willing to step in and push prices up throughout the day. So the opposite concept can sometimes be true as well, where sellers were willing to take that as an opportunity to sell their merchandise and push the price down throughout the day. So it's not terrible because we still have a bigger body than a shadow. Nonetheless, something to keep on your radar there because you don't want to see that momentum picking up to the downside. But at a minimum, the way that a lot of technicians would look at this is if we were in a sideways channel here for much of the month of August, that when we break out to the upside, the prior resistance area could become new support. So like on the Dow Jones right here, somewhere around, let's call it 26,400 would be a nice level of support for those of you that were looking to get a little bit more bullish, but you wanted to have a pullback before doing that. Let's go ahead and take a look at some 12 grids now. And let's start with, how about an intermarket analysis 12 grid. So on these 12 grids, remember that the background color of the charts will tell you that whether we have a bullish or bearish posture from an intermediate perspective using that market forecast technical indicator. As you can see on this first set of 12 grids, it's about split between the two. What we did see was volatility fell fairly significantly today. Not a big surprise there. When markets are up, volatility typically falls. However, notice the opposite is true here, where we had the long upper shadow on the S&P 500 itself, we have the long lower shadow on the VIX. Some of you might identify that as looking fairly close to a hammer looking pattern right there. Of course, a hammer does need to be confirmed the next day, but it could mean that, hey, we need to take a little bit of time to digest these gains that we received here today as a result of the positive language from the Chinese and the United States trade wars. You'll also see that we had quite the boost in Treasury yields today. We haven't seen this for a while, but this was a big move here today. We were up 7.27%, ending at exactly 1.56 on the 10-year. 1.56%. Remember, you got to move that decimal point over 1 in order to read that properly. But it basically means that the government bond is yielding 1.56% right now. And that is a decent sized boost from where we were at just a couple of days ago. Obviously, we remain in a big downtrend in yields there, but that did help support the financials today. We'll talk about that here in just a little bit, but one of the themes of the day it was very much a risk-on type of a day. A lot of the risk-off areas like your bonds, your gold, your consumer staples, your utilities, your REITs, they struggled today. And remember, they had been leaders. But with interest rates reversing course today in a rare turnabout of events there, it kind of reversed those types of trends to a degree as well. So you'll notice down below, as an example, gold sold off pretty hard today. It was down 2.4% if you're looking at GLD. Now, it remains in an uptrend, and it even continues to have its bullish posture, but it was a pretty aggressive pullback day today for gold there. You'll see that long-term treasury prices were down, so it's kind of similar to gold. They were down, but they remain in an uptrend with a bullish posture, so it's not anything where it's like stop the presses. It's not a reversal of a trend or anything like that. It's just something to be aware of, since we now do have a fairly aggressive movement in the interest rates after it used to be just kind of a one-way freight train. We've now got a little bit of pushback from the other side of the coin. So as we're looking at this, you'll also notice that foreign bonds were down today, similar to long-term treasuries and gold. Yes, we have a pullback, but we remain above a rising moving average, and we still have a bullish posture there. REITs were down today, down 0.72% according to the Vanguard version, VNQ here. But of course, REITs have been on an impressive tear here recently. That's a little bit more of an ugly candle there. Notice that we do have kind of a bearish engulfing candle up at those levels, so maybe a little bit more ominous there, whereas the bonds have already given back a little bit for the last couple of days, so perhaps much of their selling has already been taken care of. The fear with the REITs is, boy, if that is a sign of things to come, we might have a couple more aggressive days to the downside there that we need to manage through. The US dollar was kind of all over the place. We actually gapped lower on the UUP, but finished higher just barely. We were up 0.04%, but that's kind of an interesting looking candle right there, where it looked like it was going to be an ugly day for the US dollar, but it actually picked up steam towards the end of the session. It does have that pink background letting us know that we have a bearish posture, but notice how weakly bearish it is. In other words, remember on the market forecast, if you fall out of the upper reversal zone, which is at 80, you automatically have a bearish posture. So this is at 79.22. The point that I'm trying to make is we could easily go up to 80.03 tomorrow and we'd be right back to a bullish posture on the dollar. So I wouldn't read too much into that right now. Right now we continue to have, price above that rising moving average there. Moving on now to some other 12 grids. Let's take a look at the foreign stock markets. And as you can see here, things look a little bit healthier. This has been a pretty sizable improvement from where we were at just a couple of weeks ago. The only pink chart on the board is Israel, but we do have a lot of green on the board. And while the charts do have some work to do, note that all of them are still pointing down in their moving averages. So note that the moving average here is down, the moving average here is down. Whether it's red or yellow depends upon whether price is above or below that falling moving average. But the thing that ties all 12 of these charts together is that all of them except for Mexico. I take that back. That just caught the corner of my eye right there. Mexico actually does have a green moving average here. So I guess if there's one kind of area that is a little bit more interesting, it is Mexico, because it kind of started on its rebound a little bit earlier than some of the other indices, and therefore got its moving average to actually curl a little bit higher right there. So, maybe Mexico will turn into one of our leadership markets. We actually talked about some of my favorite foreign stock markets for the next 20 years in my Q&A session here today. So for those of you that want to hear my answer, I picked 3 countries that I think will excel for various reasons in the next 20 years. That is now posted on our calendar for those of you that are premium members of Market Scholars in the Q&A session that I conducted earlier today. That lasted about 2.5 hours long. And of course, David taught his portfolio management class earlier today, where he also discusses ETFs like a lot of these foreign markets. So if you want to hear our opinions on these types of matters, feel free to sign up for our premium membership and check out our recordings. And even better, if you get a chance to join us live, we have great participation amongst our student body there as well. All right, let's go ahead and take a look now at our sectors. So sector 12 grid, there we go. And this will be dedicated specifically to the United States here. But you can see we have a clean sweep. We have nothing but green charts on the board. The first chart in the upper left is the S&P 500. All 11 charts following it are the 11 different sectors that make up the S&P 500. And as you can see, things look pretty strong in the United States. Even better than what we see from a foreign stock perspective. At least from my perspective, that's the case. Part of that is because we've got more charts with kind of green moving averages. Notice that communications has a green moving average here. While Netflix has struggled, a lot of the other communication stocks have done a little bit better. Facebook's ticked up a little bit, and Alphabet. But then also keep in mind that the old telecom stocks are now part of the communication sector as well. Don't count out something like AT&T, which continues to impress me. That's the chart of AT&T right now. Doesn't get talked a lot about, but that is an impressive chart right there. All of a sudden, AT&T is starting to look like a pretty strong trend, at least if you're looking at the last 3 months in time. Of course, AT&T being a dividend aristocrat company that offers a very high yield as well. But that has been a very impressive chart here recently. So communications has a little bit of that green curl to its moving average in addition to its bullish intermediate posture. In addition to the communications, then you still have the 3 charts on the bottom, the staples, the utilities, and real estate that also have the green moving averages there as well. And those charts still look pretty good. Now, as I mentioned before, those were the charts that got hit today. Notice staples were down 0.62% today, the utilities were down 1.08%, and the REITs were down 0.87%. So this was definitely a risk-on type of a day. Now, we all know that one day does not make a trend, but we want to keep our eye on that situation because in the chaotic moments of August, when interest rates plunged, we found a lot of wacky things going on. Stocks and categories of stocks that were moving in standard deviation types of moves that you don't typically see. And some of those areas that got a bit overheated perhaps could have been some of those more defensive areas of the market. So, it's possible we need to give back a little bit of those gains that maybe we unfairly accumulated in some of those defensive areas if the stock market does decide to behave itself. Because a lot of times you'll see that money start rotating out of the defensive areas back into some of the more cyclical areas there. The discretionary space actually had a nice looking candle here today. We were up 1.91% there and closed near the high of the session. Compare that to the industrials, where the industrials actually had that long upper shadow right there, and it doesn't look as promising. The end result was about the same, but that's the whole point of analysis. When you have the ability to analyze not just what the end result was, but also how does the candlestick look, of the two, discretionary stocks maybe look a little bit more appealing here. And I think that's part of the story that David was talking about in his portfolio management class here today as well. So, perhaps that's a sign that the U.S. consumer remains strong, whereas there is some lingering trade war negative feelings out there that is affecting the industrials, whereas the consumer remains somewhat strong. That can somewhat offset that here in the United States. So that'll be interesting to see if that continues to play through or not. But discretionary looking somewhat interesting with a very, very strong candle here today, along with your communications that I mentioned there before. So anyway, some interesting developments there in a little bit of a reversal of roles, where this market has largely been dominated by the risk-off mentality for much of the last month. Today clearly was a market driven by the risk-on mentality. We did have some stocks reporting after hours as well. Speaking of consumer discretionary, here's Lululemon. This is actually a stock that we've owned for some time in my Monday top-down trend trading class. and it's up nicely after hours. Now, it's hard to say whether that's going to hold or not. Remember that these gains can easily be reversed the very next day if analysts come out and downgrade the company. But Lululemon did come out with what appears to be a fairly positive earnings report. The stock closed the regular session at $188, which was already up 4% in the normal session today. But you're now tacking on an additional $7 or $8 per share after hours, so you can basically duplicate that. And if you included the after hours activity right now, you're seeing Lululemon that was up basically 8-9% here today. Again, we don't know if that's going to hold or not, but the last traded price of Lululemon was $195.68. And remember, Lululemon is going to be one of those key consumer discretionary types of stocks. They sell that yoga wear that's quite popular yet very expensive, and it gives you a sense of the health of the consumer. And if people are willing to spend $100 on a pair of yoga pants or whatever it is that they sell, then it's a sign that the consumer is still in relatively good shape. Now remember, tomorrow we do have the jobs number. David will be sure to break that down for you in tomorrow night's video, but that does have an ability to impact the market as well. As long as people remain largely employed in the United States, the consumer has firepower to spend. And, of course, we'll be heading into the Christmas shopping period here soon enough, and we just got through the back-to-school shopping, so, that has an ability to affect some of these consumer discretionary types of stocks. Another stock I saw reporting after hours here today was DocuSign. That was another one that apparently was well received by the market because the stock is up huge here after hours. Now, this one actually closed lower in the normal session. It closed at $46.25. But you'll notice here it's up about $10 per share after hours. This is one of those kind of up-and-coming growth types of companies that is more of electronic signatures when you're signing things for mortgages or what have you. You can do it electronically these days in many cases, and this is one of the key companies behind that, DocuSign, ticker symbol DOCU, and it is clearly up strongly here. It's up about 23% here after hours. So hopefully that gives us some, positive vibrations going into tomorrow's session as well to, pick up where we left off in terms of the bullish sentiment here. Real quick over on the internet, thanks to everybody who did click like for me the last time I did the video, which had been a week ago. I was on vacation this past Tuesday. Thank you to David for filling in there. But we did have 107 of you that clicked like for me the last time around. Anytime that number's up and over 100, I'm satisfied with that. If it's less than 100, I'm less satisfied. So those of you that have gotten in the habit of doing that each day for David and myself, you're basically letting David and myself know that you want to see these videos continued on a daily basis. So if you want to cast your vote, we would encourage you to do that directly through Twitter there, and you can do it while you're watching right here in this embedded area below where you'd be watching the video on our website. Remember also that David does his live version, Market Outlook Live, on Monday, Wednesdays, and Fridays. So tomorrow, for those of you that are premium and plus members of Market Scholars, feel free to join him a half an hour before the market closes. And he's going to go ahead and do his trade idea and get that filled before the market closes, and also have a discussion around the management of his prior trades that he's placed during these Market Outlook presentations. I would imagine that's even more important on a Friday. Remember, a lot of times we do these trade ideas, and we're doing them after the market is closed, and we have no idea whether we're going to get filled on them the next morning or not. Well, on a Friday, that's even more important, because a lot of times if you don't get filled on Friday, you're waiting until Monday morning. There's a lot of news that can hit over the weekend. So getting that trade filled a half an hour before Friday's close becomes an even more important consideration for those of you that are kind of following along in your own paper money accounts with our application ideas. So again, for those of you that are premium and plus members, make sure you're checking that out if you're available during that time at 3:30 p.m. Eastern time on Monday, Wednesday, and Friday. Remember, I'm not doing it on Tuesdays and Thursdays quite yet. If you're not a member of our services yet, check out our pricing tab up at the top of our website at marketscholars.com to learn more. All right, let's go ahead and now talk about our trade application idea for the day. Let me go ahead and pull up dividend stair-step chart here, and I'm going to look at ABV. This is ticker symbol ABBV. Now, this is a dividend aristocrat company that was spun off from Abbott Labs several years ago. They kind of got in, they got an inherited spot into the aristocrat list. Typically, to be a dividend aristocrat, you have to have 25 years in a row of dividend increases. So Standard & Poor's, who owns and trademarks the dividend aristocrat list, basically allowed AbbVie to become a dividend aristocrat as soon as it was spun off, because Abbott Labs had been a dividend aristocrat that entire time. Well, you've kind of had a mixed set of results for AbbVie over time. You can see that when it was spun off, it was about a $33 stock here, and this was back in January of 2013. That $33 stock eventually became a $125 stock. Since then, it's been a house of pain. In the last couple of years, it's gone from 125 all the way down here to 67. As I tell my students fairly regularly, I do consider AbbVie to be the riskiest of the dividend aristocrats because of its heavy reliance upon one single drug, which happens to be the world's best-selling drug, Humira. However, things have started to change over at AbbVie. Many of you are probably aware that they have recently announced that they're going to be buying Allergan, ticker symbol AGN. And so you can see that big pop there in Allergan. That's the result of AbbVie making an offer for them. So that deal is likely to go through. And we'll start changing the shape of AbbVie a little bit more, and they'll have less reliance upon just simply Humira. They'll have things like Botox and all these other things that Allergan has in its portfolio of offerings. And so with this thing showing us some oversold cluster signals on a weekly chart basis here recently, I thought it would be an opportunity today to add it to our long-term portion of our portfolio. So notice over here on our monitor tab, I have added selectively these long-term positions in our dividend portfolios over time, and AbbVie is not one that we currently have for this market outlook video here. We have owned AbbVie a number of times in my other classes that we've taught over at Market Scholars, but nonetheless, we don't own it here for my market forecast presentation portfolio. We do own a whole bunch of other dividend aristocrats, including Automatic Data Processing and Franklin Resources and Caterpillar and Chevron and Emerson and let's see, who else do we own? Johnson & Johnson and Coca-Cola and McDonald's and 3M and Pepsi, Procter & Gamble, AT&T, Target, and Walmart and Exxon. So point is, we own a lot of dividend aristocrats, and I like to try to take advantage of sell-offs in the aristocrats and pick them up at sale prices when it makes sense. With AbbVie now yielding, what is it, 6.39%, it's basically the highest yield in its history, and it also has a very cheap PE ratio below 10 times earnings right now, with a very modest payout ratio of only 50% here currently. So they can certainly afford to increase their dividend in the future as long as their earnings don't plunge. And notice down below, their earnings have actually been going up. So despite what looks like a very difficult situation if you're only looking at the stock price, the earnings have actually hit an all-time high. They reported $2.26 here most recently. So anyway, today we'll just keep it nice and easy. It's just going to be a long-term position in AbbVie to add to our portfolio. So I'll just go ahead and right-click on the chart. I'm going to go ahead and go to Buy. Let me go to Edit here, because I want to make sure that I'm not paying too much for this. It did close at 67.03, so let's say we'd be willing to buy it for 67, I don't know, 13 or better as soon as tomorrow. We'll give ourselves a dime of wiggle room between where it closed today, just in case it gets bumped up a little bit tomorrow morning. I will put that in as a good till cancel order. Let's go ahead and do 150 shares in this case as well. And so let me change that. There we go. And click confirm and send. And we're spending about 10 grand on this particular position right here for the long term. Click it, send, and we'll see if we can get filled on that, hopefully first thing in the morning. All right, well, thank you for joining me here yet again. A very bullish day in the market, bullish enough to kind of reverse some of those prior trends in some cases. We also saw bullish postures pop up across the board. Notice that in the United States, at least, all of the sectors, all 11 sectors, currently have a bullish posture. That's a healthy sign there as well. I also like the fact that we broke out above our prior resistance area of our prior sideways trend that we were dealing with there in August. So hopefully that gives a little bit of momentum going into the fall. Of course, we'll keep our eyes and our ears peeled to the news headlines that will come out, but right now at least we have a little bit of positive momentum going towards the China and US trade deal. So with that, I'll wish you all the best of success with your trades and your investments. Remember, if you got value out of the video, click like for me over on Twitter. And of course, David will be back with you tomorrow. Have a great night, everybody. Bye-bye.